Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, July the 19th. My name is Eric Wilkinson. Some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters and I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data across the pond and here in the States. In Great Britain, we got CPI, came in a little bit higher than expected at 0.5%, was expected 0.4%. The PPI, which is the producer price index, came in at 1.8%, was expected 0.9%, so quite a big jump there. And then we also had the Great Britain core CPI come in at 1.4%, just slightly above the expected 1.3% there. Also here in the United States, we had housing permits come in right in line with expectation at 1.15 million units. And we also had housing starts come in slightly above expectations of 1.19%, 1.19 million units versus the 1.17 million units. I don't know that that's really affected the overall markets. They are slightly down on the day. But as you can see here, /CL, which is crude oil, down a little bit on the day, down 32 cents, right at the value area point of control. Where the most time and volume has been spent. So that's its happy area. It's the magnet. It's where the most amount of volume and time has been spent for that particular underlying. Gold futures, as you can see, are up just slightly, up $4. You know, they're inversely correlated to the overall equities. That's in gold, which is /GC. Then on to the bonds. Bonds pushing higher, again, inversely correlated to the overall equities, up almost a point. They were up a point earlier today. That's /ZB for the bond futures. And, they're pushing up as equities come off a bit. This is the NASDAQ, which is ticker symbol /NQ. As you can see, they're down about 12 points on the day, just sitting right above the value area high there. That's going to be a support level now that we've gotten above that. The bulls are going to try and keep it up there. And then on to the E-mini S&Ps, which is ticker symbol /ES, and they are off just a bit today, also down almost 6 points on the day, but off at the lows that we've seen. Then on to Netflix. These are a couple of the trades that I did for earnings. Netflix is ticker symbol NFLX, and they actually, as you can see, had a big move to the downside, down over $13, about $13.50 right now. They beat earnings. They came out and beat earnings by a few pennies there, but the big thing that struck everybody was that they were expected to increase their new users by 2.5 million new users, and they only got 1.7 million new users. So that overshadowed them beating earnings. I think they were expected to come out with 2 cents a share, and they beat by coming in at 7 cents a share. So that overshadowed everything, and Netflix is down on the day big time. So I went in there and I did the July that expire on Friday, the July 22 weeklies, and I did the 88-111 strangle. So that's the 88 puts and the 111 calls. So those calls obviously are worthless right now. So I went out there and I legged out of this strangle in a sense and bought those 111 calls for 2 cents. I did the whole package, the 88-111 strangle, for $1.90, and those 88 puts right now are just over $3. So I'm going to be watching this quite a bit. I've got a chart up on the on the 15-minute chart, just kind of waiting for it to see what happens. I'm going to probably end up doing the same thing where I'm going to roll these puts out in time, collect a little bit more credit, try and lower my overall cost basis on that, and try and get that back to a scratch if I can. I thought about rolling those calls down, but I just thought, with the beat on earnings, some people would probably come in and try and scoop that and push it a little bit higher. So we're going to have to see. I'm going to just probably end up rolling those puts out in time, or hopefully somebody doesn't stick it to me and put those stocks to me, but we'll see. On to another earnings trade, which was Goldman Sachs, which is ticker symbol GS. Basically a nothing number there, down $2 on the day. The expected move in there was quite a bit more than that. I think it was almost $5. And I went into the July weeklies also that expire on Friday, and did the 155, 170 strangle, which the 155 are the puts and the 170s are the calls. And I originally sold that yesterday late in the afternoon, about a half an hour before the close, for 75 cents. Bought it back this morning for 19 cents. Probably could have waited, but following the rules that I talk about in the webinars for earnings trades, I wanted to cover that rather quickly in the morning. And that gives me time to kind of worry about the ones, or work around the ones that are a thorn in my side, like Netflix is. So able to collect a nice credit there of over 50 cents. So that one I'm pretty happy about. Also in IBM, similar situation. I did the IBM July 22 that's settle on the 22nd, and that's this Friday. I did the 148, 172 strangle. I was able to collect $1.16 for that strangle, which was well outside the I think it was an $8 expected move. So I was able to cover that back for 07 cents there. So basically the Goldman Sachs and the IBM have paid for that loss in Netflix. I'm at a scratch for these earnings today, but I really want to try and make that Netflix get back to unchanged. I could have covered it all for a scratch on the day, but I'm a little bit stubborn that way, and I want to follow my rules of managing those losses and doing everything I can to get that Netflix back to at least break even on that. So that's what I'm doing with that. Just like I did with, if you remember, I just took off the Twitter and the GoPro not too long ago after collecting enough credit to get those down to basically break even. So that's what I'm going to be looking to do with Netflix going forward. So stay tuned for that and see how that works out. Also, tomorrow we're doing the webinar, which I usually do the webinars on Fridays, but we're going to be doing it on Wednesday this week, and we're going to be doing it on the put Christmas tree. So this is going to be for a bearish to neutral market assumption. So we're going to be able to take some of these earnings underlyings that really haven't had the volatility completely crush or come out of those underlyings, and be able to create a strategy around that. So go to ProTraderStrategies.com, sign up for that. You gotta know all of these strategies so that when the environment fits a particular situation, you know which strategy to go to and pull it out of your hat and put that into your portfolio. It's really important to know all these different strategies and how and when to implement those. All right? So go to ProTraderStrategies.com. That's all I got for you guys today. If you can't take that, take it easy.